All right, guys, so you're thinking about buying a house and you want to know what goes into your monthly payment, okay? For simple terms, we call it a PITI payment: principal, interest, taxes, and insurance, okay? Principal is basically your full loan amount broken down into, and I'm using a 30-year term because that's your normal loan term, 15, 20, 30, but we're going to go with 30, okay? It's the average American loan term, okay? So they break that down, and a segment of your payment goes towards the principal, paying down that actual loan amount. The other part is interest. So let's say you've got a 3% rate, which is actually very common right now. That is a yearly rate. So let's say you have a $100,000 loan, 3% rate is $3,000 of interest will be paid that year. They divide that by 12, and that is put into your payment. And that's in the simplest terms. Some lenders and banks do it a little bit differently. I'm not going to kind of go into all those different types of rolling average or rolling interest and all of that, okay? Taxes, real estate taxes. When you look at a property, there's going to be a tax amount based off the previous year, and then you divide that by 12, and that gets added into taxes, roughly, okay? Next is insurance, homeowner's insurance. That is, if there's a storm comes by, hailstorm, tornado, we're in the Midwest, and that is basically built into your payment as well. Now, your lender is going to most likely make you escrow taxes and insurance. What that means is those amounts of money that are being paid every month are going into two separate escrow accounts, one to pay your insurance and one to pay your taxes every year. Okay, it's basically a forced way for you to budget, and you don't hold that money, the actual lender does, and then disperses those payments as needed to, the county and or the insurance agent. Okay? Private mortgage insurance is if you don't put 20% down. Basically stating, if you don't put 20% down and you keel over and die the day after buying the house, that mortgage insurance you're basically paying into automatically so that the bank can either recoup expenses, sell the house, whatever it may be, okay? There are some loan programs where you won't have to pay PMI, depending on the certain lenders, even if you don't have 20% down, okay? Look for those, they are out there. You might pay a higher interest rate in order to avoid the PMI, so play around with your options, okay? Interest and taxes for the year and that private mortgage insurance, if applicable, are all tax deductible. So you'll get a statement at the end of the year, or January, for the previous year from your lender. It's going to break down all those for you. You give them to your accountant, or when you're doing self-taxes, you'll have all those itemized details right there and those numbers to put into your taxes, okay? Other than your monthly mortgage payment, utilities. Don't forget these. These are obviously case by case. Some houses are all electric, some have electric and gas, some are only gas. For your appliances, you're going to have electric. Then you have water, sewer, sometimes your septic if you've got a lot of land or in more of a rural area, kind of depends. And then case by case, if you want internet, cable, that's kind of on your own. So you're probably used to paying these even if you're renting. Some the landlord might pay, but don't forget about these expenses, okay? These are your basics that go into owning a home. There are your maintenance items, but we're not going to get into that. These are your guaranteed things you're going to be paying every month, okay? So guys, if you have any more questions, reach out to us. We'll be glad to help. I'm Nathan. I'm with Dorn Realty Group and associated with Alexander Realty.